Holiday shopping is in full swing. Online sales alone on Black Friday reached a record-setting $9.12 billion.
Weigh in on Black Friday sales, and what do you think the implications are for the U.S. economy and the markets at large?
Good question. I think people are still in this kind of post-COVID celebratory, like we only live once, we survived, so we're going to go big kind of a mentality. And I think that also just still speaks to this inflation issue as well, about whether or not we're going to see prices for things come down. I don't think so. I think people are still in the mindset of let's spend. You're going to start to see more and more money put on credit cards because the question is, do they actually have the money they're spending like they did when they were receiving stimulus checks? And the answer to that might be no.
Certain big box retailers are soaking up consumer spending.
I think people are shifting toward warehouse stores and places where they still want to spend, but their budgets are a little constrained. I know Macy's had really good numbers, but kind of bucking the trend, and the stock is doing really well last couple of days. So I think people are looking for value, but they still want to open their pocketbooks as much as they can.
BJ's is a company that shouldn't be overlooked. It has a Weiss safety rating of B and ranks excellent on our growth index, efficiency index, and total return index. Even though consumer spending is high, Nilus, co-editor of Safe Money Report, warns against market exuberance.
How should investors approach this last month of the year and 2023?
Cautiously. The economy will look good in the short term because of all this spending, but I still question whether or not this means, it's blue skies from here. I don't personally think that. The first thing I would tell people, and something I'm going to write about pretty extensively for the next month, is the idea of wash sale rules and tax loss harvesting and things like that. So you have opportunities, even if you have taken some hits in your portfolio, to just get a good tax benefit between now and the end of the year by selling your losers, right? Locking in those losses and then using those to offset taxes going forward, including on stocks and other investments you have gains on. Wash sale rule means if you sell a stock, you can't buy it back within the 30 days and harvest the tax loss. So if I sold IBM at a loss and I buy it back 5 days from now, that loss doesn't count for taxes. They're just like, that's a wash.
He says not to shy away from bonds right now.
The bond market looks really interesting. I'm buying a lot of bonds for myself and my family. I'd even say CDs and other really ultra conservative investments right now. If you look at interest rates, you can finally earn 4 or 5% a year on a 1-year CD.
Nilus is also co-editor of Weiss Crypto Investor.
The major issue we just talked about was how to get your assets kind of self-custody assets rather than keeping them on platforms. So that's a really timely topic for people who are worried about, another FTX type of a situation. Going forward, we will talk about how to use any crypto losses you have for a big tax benefit. Things like crypto are not subject to the wash sale rule because they're treated like commodities.
The bankruptcy of FTX, the world's second largest exchange, has cast a wide net.
It shouldn't have happened. It was certainly fraud and, in my mind, probably criminal in some ways, what was done with the funds, commingling funds with their asset management relative to the brokerage platform, things like that. The reason I say it wasn't a black swan is because it's another shockwave that really began with things like the Luna collapse. There's been a series of rolling repercussions. And I guess the question now is, are there more coming from this one? And I think the answer is yes.
Overall, this climate has created a window for people to reposition their portfolios in interesting ways. Keep in mind, a market bottom may be on the horizon, but it isn't here yet.
After you're kind of around for 10, 15, 20, 25 years, doing this, and you've seen several real panics and real collapses, I don't sense that yet. The fact that everybody keeps asking the question, are they going to pivot right now? Is this the pivot? Are we okay? We're back to good times. It's it doesn't feel like that when you're really at a bottom. Bullishness is still baked into this across all aspects of the financial markets. The Fed has to sense that if they pivot right now, it's straight back to the problems they're trying to solve. So I think they kind of have to see it through a little longer. The stock market itself is priced still at a level that is equal to what have represented some of the biggest top market tops in prior cycles. It's priced for perfection, but I have a lot of reasons to think that we're going to go into a less than perfect situation.
So stay cautious and wait for upcoming issues on how to keep money in your pocket.
Investment analyst Nilus Mattive, it's always great speaking with you. Thank you so much for your time and insights today.
No problem. Thanks for having me.